Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a review of my $28,726.97 stock portfolio. I want to say that it's been a very hectic week for me. That's why I kind of haven't been posting as much content this week. There's just been a lot of stuff kind of going on, but this is not going to be like a regular week. I'm anticipating that everything's going to be a little bit slower this month. And then coming into next month, there's probably going to be more content. And I think July is going to be the best for me in terms of making just more content in general. So I'm hoping you guys can stay patient with me as I kind of work that out. But it's just not really possible for me to produce as much just right now because of some things that are happening in my personal life. But with all those formalities out of the way, let's get into the actual review of all of my stocks and everything like that. I really appreciate everyone here and thank you for watching. So, starting out looking at my Chase account, it's currently valued at $20,930.67. We're now only down $517.46 on an unrealized basis. And this account is now generating me $579.64. And that's because I've added a little bit more Prologis and Meta, pre-Meta earnings. And Prologis I added at a pretty attractive price. I know it was under $100 a share. Very happy with that company, which we're going to talk about in a second, but I want to go through obviously the lower cost ones first. And as you guys know, it was earnings week for a lot of my stocks, so that greatly helped kind of offset a lot of the negatives in my account. And luckily, I was able to buy more of my positions before earnings actually happened, and I'm going to kind of be talking about which ones I want to add more of and which ones I kind of want to wait on. Starting off, we have Texas Roadhouse, ticker symbol TXRH. I currently have $607.21 worth. I'm up $7.21 on this overall. It's not really correct with the gain loss because it doesn't include the dividend income I've earned. I put $600 in this though. Kind of my reasoning for buying Texas Roadhouse is twofold. One is because they're one of the fastest growing chains in the restaurant industry. And I also think that the quality is very high. And I think that they don't have the problem that a lot of the fast food behemoths have. I think that there's a lot of places where Texas Roadhouse can make new restaurants and make more money from those restaurants, whether they're corporate owned or they're a chain and then the franchisee is paying them, because that's obviously very low risk to Texas Roadhouse if a franchisee wants to open up a location because they're making decent money off of that with really no risk to them. And overall, I think that this is just going to be a very high growth play that I'm very happy to hold until it hits the point where there really isn't very much growth in it anymore. So I kind of think of Texas Roadhouse as just being able to continue to improve a lot over time. And then eventually it will get to the point where McDonald's gets to, Chipotle gets to, every big fast food giant gets to, where there's no room for growth anymore, and they're just paying a high dividend for what I initially put in. So I really think that in terms of Texas Roadhouse stock, I'm going to be seen as like an early investor into this, which sounds kind of weird because it feels like they've been around for a very long time. But I think in terms of growth, I think that they have a lot of growth in the future. And this is something that I'm just going to hold for a very long period of time. I do think I want to add more to this eventually, but I do also think that some of the other stocks on my list might be better buys. So I'm just kind of keeping an eye on this. If it dips pretty low, I'm going to buy more of it. And if there aren't very many better options, I'm going to buy more of this. But overall, I'm just going to be sitting back rooting for Texas Roadhouse because I think it's an amazing business. I think there's a lot of growth there, and it's a business I'm very happy to own. Next up, we have my best performing stock and the one I have not really added much to in a very long time, Waste Management, ticker symbol WM. I'm currently up 12.95% on it. Obviously, this also doesn't include the dividend income I've received from Waste Management, but there's not really a lot to say about Waste Management other than it's a very good defensive hedge. And I bought this kind of prior to all of the tariff stuff. I believe I bought Waste Management prior to Trump's presidency. And I really wish I would have bought more of this then. Because now I think that it's really pricey for what you're getting, but I understand why it's pricier now. And that's because there's so much uncertainty. And when there's so much uncertainty in the market, people tend to want to flock to things that are more certain. And Waste Management is very certain in that it's going to continually grow despite economic conditions, despite what's happening to tariffs. Waste Management is going to be able to grow organically and buy more waste companies that's going to increase the amount of cash flow that they're bringing in periodically. So overall, I really like this stock. I think that over time, it's going to be worth more and more. And kind of my strategy in the future is going to be that if one of my tech stocks really take off and get a very high percentage, I'm going to sell a portion of those off and just bite the bullet and buy Waste Management for wherever it's at, just to kind of preserve that value there and preserve that gain in a stock that's going to pay a very reliable, good dividend with good dividend growth. I could talk ad nauseum about Waste Management and why I like the company, but I really don't think it's at a place where I want to add more right now. I think that there are more attractive companies on my list that I could be adding that look cheaper right now because of the uncertainty. And because I have a very long-term horizon, I'm comfortable with buying them at the risk that they could drop 10% in a day or something crazy like that, whereas Waste Management's going to stay the exact same. I understand people have different risk profiles and some people can't handle seeing a stock drop, but when I see a stock drop, I enjoy it because it means that I can buy more of the company for less money. And Waste Management has kind of done the opposite of that. It's grown very much, and I'm very happy with this investment. I'm not going to be selling any of my Waste Management because I think that it's a wonderful company that I want to own for the long term, but I don't really want to buy any more at these prices right now when I think that there are maybe some better opportunities out there. Next up, we have Prologis, ticker symbol PLD. I'm up 1.15% on this. The value now is $1521.23, and I've only put in $1,500 here. So that is also kind of misleading because I've gotten a dividend as well. And I believe now this is paying me about $60 a year, which is not bad for $1,500 in. And this is a triple net warehouse logistics REIT. So they own a lot of warehouse logistic real estate, and they do not pay any of the costs of the maintenance, the taxes, pretty much anything to do with the real estate once they lease it out. And I think that this is going to be a very good business as logistical networks get more complicated, as there's more business growing in the world as a whole. I think that logistic warehouses are going to be worth more money and that they're going to be able to charge either more rent for the buildings or sell them for more money. So I think that Prologis is a very good buy. I actually put $500 more into this, and I also put about $500 more into Meta as well. Overall, I think that Prologis is just a very stellar company with a lot of good prospects going forward. And I think that it's very relatively safe compared to a lot of the other stocks that I'm owning right now. And I really like stocks that have lower risk and are just easier to just give me money over time without as much of the pressures of having to overperform in a lot of ways, because I feel like expectations for some stocks are way too high, and I feel like that's not really a problem for Prologis. You pretty much know what the cash flows are going to be based on the amount that they're charging for rent, and it pretty consistently increases over time. And it does have some volatility spikes where you can kind of get in at good prices if the stock has dropped a significant amount. I do think that tariffs are going to affect this company, but overall, I'm very happy with this investment, and I want to hold it for the long term. I believe I valued it around 120 from the last earnings that they posted, but I could be wrong on that. I probably need to do another stock analysis just to look at the financials, But I think that this is a very easy to understand company, and whatever your valuation metrics tell you that it's worth, that's probably the value that you should be buying under, if that makes sense. So if you value Prologis from a free cash flow model or something similar, and you see that the stock is worth, in your opinion, 110, the 15 might be a good entry point for you, or 100 if you want to give yourself more safety. I bought my 500 worth when it was under $100 a share, and I'm just going to hold those shares pretty much in perpetuity. Next up, we have Energy Transfer, ticker symbol ET. This is a pipeline infrastructure company that essentially charges a toll for moving natural gas through their pipeline logistics kind of center underground. And I'm currently down here 13.11%. It's worth $1,698.52. I have a lot more Energy Transfer in my Webull account, which I've made a lot of money off of, so I'm not really too worried about this. I don't really want to add a lot more because I feel like 100 shares is enough in the Chase account, and it pays a pretty good dividend. I believe it pays about 32.75 cents a quarter, something like that. And I just reinvest all the dividends in all of these stocks back into themselves. I'm also getting a way bigger payout from my Webull account. I have about 328 shares there, which pay from the last dividend $106.60 that I just bring either into the Chase account or I collect as cash. But I really like this company because I think that energy demand is going to increase in the future. And I think that energy companies are in a really good spot to profit off of, for one, the AI, because that's the data training is going to need a ton of energy to be able to be supported. And I also think the infrastructure in the United States is growing at a pretty steady rate. So I think that those two things combined will cause a much higher demand for natural energy, just energy in general. Next up, we have Meta, ticker symbol Meta. I'm up 4.35% on this stock post earnings. Earnings were awesome for Meta. And I had bought another share of this kind of prior when I bought the Prologis shares for $484. Yeah, I really think that Meta is in a great position. I would like to add more of this. I think that a fair value for this is around $700. And I think that this is going to be one of those stocks that just continually grows. I think it's going to be one of the biggest benefactors of AI, because I think one of the chief things that AI is going to be doing is that it's going to be making it so that ads are more custom tailored for users. And Meta has some of the most users on their sites. They have some of the best data to train their AI, Llama, which I think is going to be very exciting for the company and drive a lot of growth for the company. I think that they have a monopoly on social media as well, which is also making them a lot more real money that you can see in the earnings. And I think that earnings is just going to continue to grow. I think that there's kind of a disconnect between Wall Street and kind of the tech companies. And I really think that Meta is really being underestimated for what it is. I think a lot of people don't understand the potential of Meta, and that's why I'm going to be continuing to hold this stock for the long term as well. I think that this is just going to continually grow. I think the only way that I would sell Meta is if it jumped up to like $1,000. I would probably sell a share or two. But I really just want to hold this because I think that they're going to be able to continue to grow and benefit off of the new technologies that are coming. I also think their business is very monopolistic. It's not really going anywhere. They're very well funded. They don't have a lot of debt. They have very significant cash flows coming in. And I think that there is still continued growth to be had in Meta. And I think a lot of people really underestimate how amazing of a company that Meta really is. Next up, we have American Express, ticker symbol AXP. I'm up 1.89% on this, and the value is $1,944.66. So this is one that I was really stressing a lot and talking about how I thought it was a really good time to buy, especially when it was around the 240s, 250s. I still think that it's a good buy here. I think that American Express is one of those companies that is able to continually grow over time, pretty much through a lot of different economic conditions. And the growth of the revenue has been very consistent over time for years and years and years. And it's amazing that such a mature company has so much quality in it and so much growth in it as well. I think that this is something that you could buy and hold for 20 years and be very assured that it's going to be worth more over time. Their last earnings was very good as well. You could see that the richer consumers are still buying right now, and their efforts to get into Gen Z and millennials is also working very well. So I really think that American Express is just an amazing company that is really still being undervalued, in my opinion. I also think that the dividend's going to grow over time too. It's going to make me a lot more money over time. I don't really ever want to sell this because I feel like it's one of those stocks that you have to eventually usually bite the bullet on and buy it at a little bit of a premium so then you can hold it for the long term. But I was lucky enough to get it at an undervalued price, and I think that that's kind of something where you don't want to sell out of it. You just want to hold it for the long term and collect the dividends that are there, and then only sell it if you absolutely need the money or if it makes sense to buy something else that you think is a better opportunity. But American Express is absolutely a company that you can put the money into and just sit back and watch, because it's going to continue to grow, in my non-financial advisor opinion. I think that American Express is going to just continue to grow over time and be a really amazing investment when I look back on it. I mean, I think that it's going to take a decent amount of time for it to really pan out the way I want to, but with the history of the company has performed very well over a long period of time, very consistently, and I don't really see that stopping, because I think payment processors are going to continue to be a very big part of our lives, and they're going to continue to grow at the rate that we've seen. Next up, we have Amazon, ticker symbol AMZN. I'm currently down 6.53% on this. And the current value is $2,990.89. I've kind of talked a lot about Amazon. I thought that the earnings were fine. I think that Wall Street is just freaking out over nothing again. They're looking for the short-term results, but they beat earnings. I really think that the company as a whole is very strong. I think that they're going to continue to be able to grow. And I think that they're very smart about where they're allocating their money to grow their cash flows more. Kind of the opposite of Apple, where you see that Apple hasn't really innovated or gotten into anything new in a very long time, whereas Amazon is constantly looking for areas where it can grow and improve as a company, improve the cash flow, get higher growth, because they have a lot of cash coming in already, so they're just trying to look for ways that they can get even more cash coming in. I think that AWS is going to be huge in the future. I mean, everything's really getting built off of AWS. I think that this is an amazing, once-in-a-lifetime kind of company, and I think it would be very silly to sell out of Amazon when it's such an amazing business that really does have a lot more growth in store if you look at all of the smaller things that they're investing in, and just AWS as a whole. I think that's going to be huge. I think that they're also very smart with getting into a lot of the media that they're getting into, and this is just an amazing conglomerate of a company that I think that everyone should be taking a serious look at, because I think it's a very strong business that really is very strategic and smart about what they're doing, and I'm very happy to be owning it. I would love to be able to buy more of this stock as I get more money in. I think it's a very strong business, and I'm kind of split between Amazon and Meta, because I think that Meta is also very monopolistic, very strong. They're going to benefit greatly from AI, but the more I think about it, I think that maybe the Amazon logistics network that they have set up, and Amazon Prime and all these different things that they have, is maybe more valuable than Meta, and I think that the market cap is higher, but I don't know. I kind of go back and forth between the two companies when I'm deciding what to invest in. Obviously, it would have been smarter of me to have bought more Meta instead of more Amazon, but I think that long term, both of these companies are going to be very good picks, and I really think that Amazon is going to be a very good pick long term. As we kind of see retail start to get lower and lower market shares, because I really think that that's a trend that has been continuing to happen because it's such a good service that Amazon offers, where you can just buy items for very fair prices. And one thing I really want to talk about with Amazon before I forget is that I think that the tariffs could actually help them in terms of being able to eliminate a lot of their competition overseas. I know you see Temu, Shein, a lot of these other services that are similar to Amazon are getting hit a lot worse by the tariffs than Amazon is. Obviously, Amazon is getting hit by the tariffs, but I believe that they'll be able to weather the storm and be stronger afterwards because their competitors are going to be more hurt. And this was actually very similar to the thesis that I had when during COVID, I was buying a lot of fast food stocks because I thought that the mom and pop stores would be very hurt by the pandemic and have to close down, and the fast food corporations that could lobby would be able to stay. So I think we're kind of seeing a similar thing with the tariffs where the weaker, smaller companies that can't afford the tariffs are going to go out of business, whereas the stronger businesses that can weather the storm like Amazon are going to remain and then take up more market share. So that's kind of a side thought that I had about Amazon, but I really think that it's a very strong business and I'm very happy I'm holding it. Next up, we have my second largest position, Salesforce, ticker symbol CRM. It's down 10.2%. Current value is $3,303.51. I talk about it pretty periodically, but I think that this is probably a very undervalued business in terms of what they do, in terms of what they're moving towards, and I really think that software is very undervalued by Wall Street until they see the results of it. And I think that Salesforce is very similar to a lot of other companies on this list where they're very strategic and smart about where they put their money. They're very consistently growing every single year. And a lot of the reason why Wall Street has kind of soured on Salesforce is that their own projections are lower than what Wall Street would have wanted. Whereas I'm just happy with a stock that's able to consistently grow every single year, especially if I'm holding it for 10, 20 years. I think that Salesforce is moving in the right direction. I think that it's a very good business, and I would like to buy more Salesforce. I know a lot of analysts have Salesforce at a lot higher of a price than what it's trading at now, and I tend to agree with them. I think that Salesforce is probably the most undervalued stock on this list, but I also think it's one of the riskier ones just because certain things have to kind of pan out correctly. I do believe that Agent Force is going to be a very big thing, and I think it makes sense that they're really trying to push this. And overall, I just think that Salesforce is a great company that I want to own more of, and it's gone on sale. So I think we're going to be looking back at this time, and if you're watching this video from the future, you're going to be looking back at some of these stocks and saying, wow, these ones are really undervalued. This one might not have been as smart of a play. You should have put it more into this one. And I think Salesforce is going to be one of the ones where it was extremely undervalued because people really didn't see the value today. But in the future, I think that a lot of the potential and the value for Salesforce is going to be realized. Or I'm going to have to wait a little bit longer and it's going to grow to the point where it's going to increase in value because the earnings are going to increase and the overall value of the company is going to increase. So I feel very strongly about Salesforce, and I'm going to continue to buy more of it if it continues to be at this low of a price. Finally, we have Vici Properties, ticker symbol Vici. I'm currently up 28.20 on that, but that's also misleading. This has the highest dividend in this portfolio. So in reality, I'm up $160 on this, and I've invested $5,500 exactly into Vici. And this is also a triple net real estate company, kind of similar to Prologis. But the big difference between Vici and Prologis is that Vici owns the most real estate on the Las Vegas Strip. They don't obviously own the rights to run the casino. They just own the rights to own the physical buildings. And so they're paid out by the casino operators. They also own some other experiential real estate. And this is just a very low risk play. where they have to, as a REIT, they have to pay a certain percentage back in dividends, but the other net income that they keep, they can use to pay off debt, buy back shares, buy new properties to increase the cash flow. So I think that this is a very stable, good company. They're also the quickest REIT to go from IPO to the S&P 500. And overall, I think that they're just a very strong company that over time is going to grow. Not very quickly compared to a lot of the other stocks on this list, but I don't really care as long as they grow consistently and they continue to pay me a good dividend that makes me money. Because over time, that's really what matters to me, is having consistent good dividends. And for $5,500 in, I'm now getting paid about $309 a year, and they do consistently raise their dividend as well. So I'm expecting to make more passive income off of this stock for a pretty safe type of business. I mean, it's not likely that a casino is really going to default unless we have another COVID-19, which I don't think is going to happen within our lifetimes. And I still think that the casino would still be able to pay their rent to Vici. These are also longer term leases, which is very nice. And again, they don't have to cover any of the maintenance, any of the repairs, any of the property taxes. They just get to collect their rental income. And that's the type of company that I want to be in. One where it's very easy to understand. I can kind of get my own value for what I think the company should be worth. I think it should be worth around 34 to 36 right now at a fair value, but I've only really been buying when it hits under $30 because I have so much of it. And I think that that's very clear that it's being undervalued when it dips below 30. So I put some serious capital down when that does happen. And yeah, I think that Vici is, I'm not necessarily looking to add more, but if the stock drops down below that $30 mark, I am going to add more because it seems like the easiest one to see that it's undervalued out of all these stocks. I mean, I'm obviously not an expert on every single one of these industries that I'm invested in, but with Vici, it seems very straightforward. You can kind of tell what the cash flows are. You can estimate what the future cash flows are going to be. I think that it's very clear that interest rates are eventually going to come down, which is going to lead to refinancing being cheaper, and they do have a pretty significant amount of debt. They can handle it, though, which is also is a concern for a lot of other real estate businesses. But for me, I think that whenever Vici dips below $30, that means that it's a very easy buy for me, and I'm going to allocate my capital to that when that happens. We might not get that opportunity ever again. Vici might just steadily grow, which I think could be very likely. But if it does dip below 30, I will be looking to add more. Next up, now we have the Webull account, and we've got some good news in the Webull account. I mean, this is an account that if you guys have watched the channel for a while, you know I do not trade. I just kind of collect the dividends. I don't do anything with this account. This would be the first thing I would liquidate in case I really needed the money. But this has some DraftKings, which has obviously done abysmally, but it's only $148 worth, so I don't really care. I'm just holding the DraftKings just to kind of see what the stock does because I thought it would be very high growth, very high risk, so kind of rolling the dice with that on some profits from a trade that I did a while ago on DraftKings, put half the money into stock and just kind of let it ride. But the real thing I really want to talk about in the Webull account is my Microsoft position, because this was down 10%, I believe, the last week that I did one of these videos. And now we are up 2.89% on good earnings, which I talked about very extensively with the Office Suite, Xbox, everything like that they have being such big cash cows. I think that Wall Street really underestimated tech just as a whole and oversold it, and I'm happy I didn't sell any of my Microsoft, and I'm happy I'm not selling any now because I really think that Microsoft is going to be able to continue to grow over time because they're very similar to Amazon and that they have some big cash cow businesses that make them a ton of money, and then they're able to invest them into things that make them even more money. And you can see that they're basically the second biggest competitor to Amazon in the terms of cloud computing with their Azure versus AWS. And overall, I'm very happy with the Webull account. It's up decently. I know Energy Transfer has been hit pretty hard, but again, I don't really I'd be looking to buy some more of it, not in this account. I might buy some more in the Chase account, but again, I'm still up 42% on it, and that's all profit. So that's going to pay me a good dividend that I'm probably going to put into the Chase account, might buy more Energy Transfer. But Microsoft is now positive. So that's a big plus for this account. That's kind of all I have overall. Like I said at the beginning of the video, it's been kind of hectic for me to kind of make videos, just with some personal stuff that's just been going on. I really appreciate your guys' patience. Obviously, I love all the fans and I love all the people that give me constructive feedback and help me to make the channel better. And I'm really hoping that I can continue to make videos at a consistent pace still. Obviously, this video is like the biggest video I make every week is the portfolio update currently on the channel. So I want to continue making that every single week, no matter what. But this week's just been really hectic. I'm estimating that in July is going to be the best time for the channel. I want to have consistent streams during that time. I'm gonna have probably sporadic streams, things of that nature if you guys are interested at all. And I'm also gonna have some more just regular videos probably in the coming weeks. But once we get to July, I'm probably going to have some regularly scheduled streams, so I'd be interested to hear what you guys think about that. Obviously, I have that at the end of the video just because the people that stick around to the end are the people that are probably going to care. So let me know in the comments when you would want to see like specific streams, what you would want to see in those streams, and yeah, thank you so much for watching. I really appreciate everyone watching to the end, and thank you so much. I hope you have a great rest of your weekend. Bye.